Divorce Real Estate. I'm Amber Gifford, and this is my husband and teammate, Scotty Gifford. And today, what are we talking about?
Taxes.
Ooh. So today, by the way, you're wearing the same color shirt as me.
It wasn't planned.
This is what happens when you live together. You start dressing the same. Anyway, taxes. The shirts combo might be more fun, but anyway. So, capital gains tax on real estate and the implications it has on you if you're getting a divorce.
Oh, yeah. So this is a good one to go over because not only are we coming to the beginning of the year and people start thinking about their taxes, but we've also seen home prices increase dramatically. And then if you're contemplating divorce, there can be some big tax implications that could be affecting you.
So if you're not sure what capital gains taxes are, because I know probably when I went through my divorce, I didn't know what a lot of this stuff was. So do you want to tell them what capital gain taxes are, and then we can say the example?
Yeah, so we're talking about long-term capital gains, right? And so the long-term capital gains is usually most people fall into the 15% tax bracket, and that's for people that earn from about $40,000 for individuals to $80,000 as married couples, up to $400,000 plus. So that'll encompass, 80% of the population at least.
So when you're selling your property, it's called a capital gains on your profits.
Yeah, and so the profit is going to be what your basis is, minus your gain, right? And then you can exclude some selling costs in there too. But so essentially, you want to give the story or you want to go into...
Well, I was just going to say, y'all, we're kind of dumbing it down here because, like I said, a lot of people don't know what this is. They don't know where it comes into play. And I'll admit, I had no idea when I went through my divorce. So I'm going to talk through it with Scotty and kind of ask questions. And if you're a smarty pants and you already know what capital gains are, rock on. We're going to let you know about divorce with that. But if you don't know, this should help you. So we're going to try to dumb it down a little bit so you can get the basis of it. But we talked about the current exclusions. So $250,000 for an individual and then $500,000 for a married couple.
Yeah, and that's the exclusion you get. So that's the taxes you won't have to pay if you sell the home. You don't have to pay that $250,000 or the $500,000 if you're married.
Well, what qualifies you?
So to qualify for the exclusion, there's two usage rules, right? The ownership and usage rule. So you have to own the home.
2 of the 5 years.
Yeah, you have to own the home 2 of the 5 and lived in it the last 2 of the 5, right?
Not concurrent though, right?
It doesn't have to be in a row, right? So you could live in it 1 year, move out for 3 years, and then move back in for the last year, and then you would still qualify for your capital gains exclusion.
Can it be a rental property or a vacation home?
No, it doesn't work for rental properties, vacation homes, investment properties of any kind. It has to be your primary residence only.
Okay, so right there's a good start.
And then the last thing about that, though, you got as far as the individual, is about the title.
Yeah, we don't want to.
So if you own the home and you're married, you get the $500,000 exclusion. If you just own the home by yourself and no one else is on the title and you're not your spouse, then you would be limited to the $250,000 exclusion.
Correct. So I'll just give you a story.
Mm-hmm.
So we have a client and she is going to be getting a divorce. Her thought process was, I will buy him out and then I will sell the house. She bought her home at $300,000 and based off her comparable market analysis, she's able to sell around $800,000. What does that mean for her?
So that means she looks like she has about a $500,000 capital gains.
Meaning she's going to sell that house and she's going to be taxed on that money, correct?
Yeah, so if she chooses to sell the home before she gets the divorce and they're both on title, then they would be excluded that $500,000 and owe zero in capital gains tax.
So let's say she go ahead and she's like, all right, I'm going to get a divorce and then I'm going to sell. What is she looking at number-wise for taxes on a $300,000 when she purchased, $800,000 sell?
So now she has the $500,000 capital gains. She gets only the $250,000 exclusion because she's the only one on title. She's lived there the last 2 of the 5 years. So now she's going to have a tax bill of long-term capital gains of the $250,000, which comes to approximately $37,500 in taxes.
Ouch. So that's a lot of money to be taxed on. depending upon where your tax bracket is, it doesn't matter.
It's a lot of money no matter who you are, I think. If
Yeah.
you got $37,000 laying around and you don't want it, you can give it to me.
So her situation when we brought this to light was, oh my gosh, I think maybe that we need to sell prior to. Because if you're buying out your spouse, it's not going to apply if you know you're keeping the house, right?
Yeah, so if you're going through divorce and you're going to choose to stay in the home and you know you're going to stay in the home for the long term, not just a year or two, we wouldn't recommend it, that because that's going to, if you're going to sell in a year or two, it gets complicated.
Let me stop you there. If you know you're going to stay there, I mean, the reason you know this is because you've worked with a specialized real estate agent who just does divorce, and they've worked through the numbers with you, showing you what this looks like, what you're going to be owing in HOA and taxes, your 1% maintenance, all things that we talked about in another video, and knowing your capital gains. So if you're going to be keeping the home and you know this for a fact for more than a year.
Yeah, so if you're going to plan on keeping the home for the long term, then there's no tax implications for the out spouse or the spouse that's leaving the home and selling it to their end spouse, or the spouse that's keeping the home.
Right.
So there's no tax implications when you leave the home and sell it to your spouse. And there's also no tax implications for this person staying in the home because they're keeping the property. There is no sell to a third party, so therefore there is no capital gains tax due then either.
So this applies to you if you're selling your home, and it's going to apply to you about when you are filing for divorce based off when you sell the home.
Yes. So coming tax time, once you sell the home, there's going to be this is where it comes into play, right?
And Scotty's right. Like, this is the first of the year. People are thinking about taxes, and we cannot stress enough about the economy and what's happened in the housing market. All the numbers are inflated. So it is very likely that what you purchased at and what you can sell at is significant and something that you need to consider.
Yeah, and so this is just one of the many things that go into the consideration for divorce, because when all people think about divorce, they think about the home, think about the children, think about the assets, but they're not usually, yeah, exactly, but they're not usually thinking about
capital gains.
Yeah, taxes, right? Who thinks of it? And so we can, like I said, I think we can get into it later, maybe another video about the 7 other implications for taxes that come through when you go through divorce. But this is just the big one as far as capital gains, and that's why we're doing this one specifically and covering it in this video.
And all the more reason that you need a thinking partner, a CDFA, you need your attorney, maybe a coach, you need a real estate agent that specializes in divorce. So we cannot stress that enough to you as well. And our takeaways are.
So our takeaways are is that the tax implications can be very large, depending on whether you get the $250,000 exclusion or the $500,000 exclusion, whether you're married or
$250
classified as an individual.
Is individual, $500 is married. And what qualifies you? The usage rule?
Yeah, they got to be living in the home the last 2 of the 5, and both spouses must be on title.
Right, and a primary residence.
Yeah, as your primary residence, right? So.
Thanks so much for watching, and Scotty and I bring real life experiences to all your real estate needs. Have a great day. Or night. Maybe you're laying in bed scrolling. Sorry, that's what divorcing people do.